let's dig in a little bit more in just terms of the product and the market. So you obviously get started, you're a million in ARR coming out of OIC, you've got money in the bank. It's been almost, 7 years if you guys got started in 2018. I mean, e-commerce, I think, has changed in a number of ways. And there's tons of e-com enablement companies and all of that. So it's probably hard to summarize, but like, what has that experience been like? And I'm assuming it hasn't all been tailwinds. Walk me through maybe the evolution, and you're still around crushing it.
Sure, yeah. What's interesting about our market, right? So what we do is we help e-commerce Shopify businesses communicate with their customers through text, right? It's been this all used to be done through email, but email performance has been decreasing year over year for a decade, right? And so we kind of e-commerce needed a mobile first communication channel with consumers. That's kind of the thesis and why it's working so well, right? But back then, when we would talk with customers, the number one thing that they would say, probably more than half of customers would say, I don't want to, Shopify merchants would say, I don't want to bother my customers, right? I don't want to bother them by texting them. In reality, what we saw on the back end, what was happening was that consumers were getting used to being texted by businesses, right? I think this is right when dentists started texting you, right? Like dentists and service businesses and things like that. There was this field in Shopify where people could put in either their email or their phone number. And we were seeing that more than half of consumers were putting in their phone number instead of their email address as their primary contact info. And so that was kind of the unique insight. Yeah, 6-7 years later, that's obvious. It's like, oh, SMS marketing was this obvious thing. And back then people were like, no, it's this 10-year-old, 15-year-old technology. It's not, consumers don't want to be texted by businesses. And so you had to like take that contrarian look. I think that the risk was very low to take that bet because we were iterating on so many different ideas, we could have just thrown it away, but it ended up being the thing. So in terms of how e-commerce has changed, I would say obviously Shopify has only gotten stronger. The platform effect, their ecosystem was absolutely the right play for them. And I would say that these retention channels that we power, right, where you're trying to either get customers who haven't purchased back to your site or get customers who have purchased back for new deals, Black Friday, different things like that, it's gotten more and more important because Meta has gotten more and more expensive, right? I think everybody remembers 2015, even 2012 to 2015, the CPAs on Facebook were nothing. It was like $3 for a purchase, $5 for a purchase. Now I wouldn't be surprised if customers were paying $25 for a purchase. And so It's gotten much, much harder for e-commerce merchants to get those first purchases, to get people in the door. And it's good that they have a channel like ours because you pay Meta $5 just to get someone to your site. If they sign up for SMS, the next text that you send is 1 cent, right? So there's orders of magnitude difference in what you're paying to get people to your site. And I think that we've had tailwinds there, right? Headwinds wise, I would say that, and this is probably relevant to any founder out there, which is that we came into a very, very competitive, like kind of sexy market, which we're not trying to go into. But there's this company, Attentive Mobile, who was like a year and a half, 2 years ahead of us. Klaviyo just went public. They're doing very well. And I can confidently say that as a bootstrapped company, we wouldn't have survived. Pretty confident in saying that. Because in one of our investors was very clear about this when, Attentive's raised $1 billion of capital. We've raised around 100 million. So we're like very much an underdog in a fight. But if we hadn't have done that, we would have absolutely been bringing a knife to a gunfight. You don't want to do that. And so I would say to founders that are maybe hesitant to raise capital, you have to take that within the context of your entire market. Because and this was ZERP times and everything like that, right? If someone is going to be buying we were seeing companies offer our customers $100,000 cash to move over to their product. They were like, if you just move over, we'll pay you in cash $100,000. And so we just wouldn't have survived otherwise. And so headwinds wise, like competitive markets, I think they make great companies. I am thankful for our competitors because they've made me a better entrepreneur. And at the end of the day, that's one of my goals. And so I love competitive markets in that way. But that's something that we've had to consider along the way.
Interesting. Yeah. And then is your business model similar across like all of your competitors? Or are you guys all kind of structured the same way?
Yes. It's all usage-based too, which is interesting as you talk with investors, where it's not quite ARR, but also it has upsides that ARR doesn't have because you can get these outside spends, right? I think that usage-based businesses tend to have much better NDR because they just have a natural expansion motion, right? So for example, for us, our customers' list size of compliant phone numbers they can send to every year goes up. And so if they just want to send the same amount of messages to their list, it's actually like they're sending more usage to do that. And so there's a nice expansion motion within the business. And I think that everybody has seen that now. Everybody's made use of that. And also just from a COGS perspective, you're paying carriers to deliver messages, right? And so everybody tends to have the same COG profile.
Are you set up with WhatsApp now as well?
So we're talking with the Meta teams a lot about this type of stuff. We're actually most excited about RCS, which rolled out in the most recent iOS update. So all overnight, right? So for 4 years, people were talking about RCS. Overnight, every iPhone has RCS. Crazy thing. And it's a much better experience for the consumer and for the brand, right? The brand has been wanting to send high definition videos all this time, voice notes, carousels of different products that they're launching. And SMS has been an archaic technology that hasn't allowed them to do that. RCS goes over the data networks. It doesn't have bandwidth issues. It doesn't have throughput issues, all sorts of things like that. We're actually most excited about that. We already have multiple merchants sending over RCS, and the only bottleneck to us is like carrier adoption and onboarding our brands. And so we'll have our top brands on it this quarter, and then throughout the year, we'll onboard basically all of our brands.
That's awesome. Let's go back to fundraising a little bit. So you came out of YC guns blazing. Were you preempted most of the time along this journey since the business and the revenue were just, it was all working? Or did you strategically go out, let's say every couple years and follow the standard like Series A benchmarks, great, let's raise Series B, and then, now you're at over 100 million in funds raised?
Yeah, so we've been incredibly fortunate in our fundraising, except for up until I would say 2022. I've got a fun story there. But early on, so yes, coming out of YC, we had that round. It was 1.5 on 15, right? And then we had someone reach out 3 months later to do 3 on 30. And that person, it was TJ Mahoney at Accomplice, and like another phenomenal person, operator turned investor. And he came in and preempted that round, and we also had a competitive term sheet during that round as well from a larger firm that we thought wasn't right for seed. And so we kept the relationship going. And that came in handy because during the kind of COVID crash, March of 2020, we had a bank balance. I think we were pretty much profitable, but it was one of those things where every stock crashed. People actually weren't sure where e-commerce was going to go at the time. And so we padded our bank account with like a very soft Series A, which was actually a safe. And that was because of the relationships that we had built from the seed round as well. And so it's really good to like continue these relationships even with larger firms, because you can actually preempt your own round if the investor has a good enough relationship with you, where you can say, hey, we just need to kind of pad the bank account. How does this sound? And it can be that easy. Series B was kind of similar with Greylock, and the Series C was it was in early to mid 2022, which was like the ZERP crash. Yeah.
Horrible timing.
Horrible timing. Yeah, that was when I had a real fundraise where like it took months. I talked to a ton of different people, and it was very visceral to me in multiple calls where I remember very specifically talking to multiple firms on one day, which was a terrible day to talk to firms, where the NASDAQ was down 5% in like intraday trading. And I could tell they were not even looking at me. Like they were looking at with CNBC on their other screen. Yeah. Like and you're trying to fundraise $60 million for someone who is just looking at their bank account, their LP's bank account, the VC, like everything just go down, their valuations of the companies they've already invested in. And that was just a really difficult time. But I think that if you talk to enough people, you find the right people. O1 Advisors came in and ended up being like a great deal for them, great deal for everyone. And they're also, operators turned investors, and they've been phenomenal too. So that was definitely a harder one. Nowadays, it's probably somewhere in between, right? Things have absolutely gotten better, but fundraising for investors via LPs doesn't seem like it's really easy today. I don't know, you can tell me, but it doesn't seem like the money's exactly flowing yet.
No, I don't think we're there yet. I think at Growth, people are kind of picking their heads up. I think this year is actually, we're kind of coming out of the woods a little bit. I cross my fingers and toes. And then pre-seed and seed has always been super active. I feel like those numbers don't change too much and the prices don't change too much, but that's fantastic.